Welcome to the Money GPS. You came here for the truth, so let me unveil that for you today. This is a big one because it will affect everybody, starting with Europe, but then that will have reverberations all around the world. The first thing I want to look at is Germany unfriending Russia. Of course, it goes a lot deeper. The second thing I want to look at is the shipping blocks that are happening, the things that are preventing stuff from moving around the world. I'll give you some updates surrounding that, financial conditions and stock markets, and so many other things today. Let's begin right here. Germany ready to back EU ban on Russian oil if it's gradual. Berlin prefers a ban with a transition period. European diplomats discussing various sanction mechanisms. We will see what happens, of course, but this is going on right now. First, they say, okay, it's going to be coal, and now they're talking about oil. My personal opinion is this whole gradual thing. I mean, that's got to be real gradual. Okay. That's just not going to happen in a short period of time. This would absolutely, I mean, getting off of Russian oil, number one, it's going to take a long time because now you got to set up all these new partners and things. But that would I mean, if it was just overnight, it would immediately plunge the country into darkness. Germany is prepared to back a gradual ban on Russian oil as the EU countries scramble to respond to an escalating energy crisis that saw Moscow cut off the gas supplies to two of the bloc's member states on Wednesday, which I will talk about more in a second here. Berlin would support a phased approach to targeting oil rather than some of the other options that have been discussed, such as a price cap or payment mechanisms to withhold parts of Moscow's revenue. So basically, they're trying to hit Russia where it hurts, the gas, the oil. That's the big one for them, obviously. The ban would need to come with a transition period. Like I said, is it going to happen? I mean, come on. The EU took a similar delayed approach when it banned coal earlier this month. So as we see what's happening with Russia and Ukraine continuing on longer than most people thought it would, this is putting additional pressure on these countries to take action. Okay. Look at this. Russia dramatically escalated its standoff with the West over the war in Ukraine on Wednesday, cutting off the natural gas to NATO members. Poland and Bulgaria threatened to disconnect even more nations. So what's happening right here? Well, Russia has said, you have basically cut us off from SWIFT. You take us off of your systems. You say we can't do business with these people and those people. And so we ask, if you want our products, pay us in our currency. And that's it. That's the deal. Pay us in rubles. But they're at the same time saying, no, you can't do that. So they're putting them in sort of this odd position. And, I'm just seeing what they're looking at right now. They're cutting them off because they're saying, hey, if you're not going to pay me in that currency that we can utilize, well, then we don't want to deal with you. Can Africa offer an alternative to Russian gas? Major natural gas exporting countries in Africa and pipeline routes to Europe. And you can see right here, Algeria and Nigeria. Algeria being 17%, Nigeria being 4%. So that's the share of the EU gas imports in 2021. Still much smaller than where they need to be. I mean, it just can't overnight or let's say, okay, by the end of 2022, we want all of our gas to be coming from Algeria and Nigeria. Not going to happen, but that can occur over many, many years, certainly. So we will see what happens here with their natural gas, getting it from multiple countries. They could start to expand, and perhaps they will. But of course, like I said, these are things that have been ingrained. And that's why I always say you have to have many different partners. Transnistria and Ukraine conflict. Is war spreading? So this is something that I had highlighted in a previous video. Mysterious explosions in Transnistria, a breakaway Russian-controlled territory in Moldova bordering on Ukraine. They have raised fears that Ukraine's conflict may be spreading. There was apparently a map that was shown or something in a presentation, and it highlighted Moldova. I had brought that up in a previous video, let's say a month ago or something, suggesting that this would go on into other countries as well. Is that the case? Well, we'll see what happens. I really don't know at this point, but certainly if they're going to go for it, I guess when you're on the bad list, might as well just go for it. I think that's the mentality. I'm not saying they should, but mystery fires at sensitive facilities compound Russia's war challenge. So, is there a proxy war going on? That's kind of the next question that many have started to ask. Storage depot, sensitive defense research site, country's largest chemical plant. They are raising suspicions that at least some may have been caused by sabotage or Ukrainian attacks. So, there it is. I don't want to, go on too much with these things because we're talking about speculation. I don't normally get into that, but of course this affects everybody because it's going to have an impact. Geopolitical tensions rising. EU tells gas companies not to bend to Russia's demand for rubles. That's right. Don't you dare. I mean, they're put in this position, and I think it's just unusual, to say the least, the way that we have seen it going on with these countries so heavily dependent on Russia. And then they just want them to cut off from that. And obviously, for the average person who's depending on that gas or oil or whatever it is, if that is now triple the price, that's hurting those people too, right? So, I really feel for people today. Okay, now we're going to talk about what's happening with the supply chain, a continuing problem. And you could see major shipping firm sees signs of supply chain bottlenecks easing. Yang Ming chairman views China lockdowns as a short-term issue. So what's happening right now, Shanghai and other places are either in, I think it was 50 cities or actually 100 cities who are in some level of lockdown. Okay, it could be just very, very minimal, or it could be a full lockdown, everybody stays at home kind of situation. And so, according to the chairman here of this major institution, he's saying short term. Cheng sees global recovery taking a break and then strengthening. I'm not sure. In China, it's a different story because they're reducing the reserve requirement ratios. They're generally easing. They're pumping in more money through the social financing. They're trying to get those loans out there. And they're trying to get the economy going again while the rest of the world is actually tightening. It's crazy. It's so different. Okay. This was interesting and a good sign. Currently, the number of ships waiting outside of the ports of LA and Long Beach have been reduced to less than 40 from more than 100 earlier this year. The only thing I don't know, and if they might explain it in here, but if you remember, a lot of those ships were waiting way off the coast, so they didn't count in the numbers. But anyway, we'll see. Apparently, they're saying that the port congestion has been easing. The last report I had personally was approximately 40 days from the Shanghai area over to LA Long Beach. So we'll see. Wave of U.S. imports, inbound container volumes in major U.S. ports neared a record in March. So the actual total volume has not subsided. Okay, a lot of stuff still making its way. A lot of what people are doing is essentially buying more than they need. And I completely understand why. Global supply chain crisis flares up again where it all began. Ports are already snarled, with the $22 trillion trade in global goods facing months of severe disruption. So this is the other end of the spectrum. Remember, on this channel, I try to bring you from different sources. I'm not just going to show you one person, one individual, and say, this is the gospel, this is what he said, so therefore that's what it's going to be. No, I show you it from different lights and different angles. China's stringent rules are about to unleash another wave of summer chaos on supply chains between Asia, the US, and Europe. So the Chinese ports, they're shut down, they're locked down. Shanghai, as far as I'm aware, is still that port is still closed. So the stuff is going to Ningbo and others, and that's backed up as well. So, how do you get around this? Well, of course, at this time, the stuff is going to other ports, but it just does not happen so quickly. And as a result, what does that mean? GPS, get to the point. inflation, more inflation, price inflation that is. On top of all of that, we have the central banks thinking that they can fix a lot of this by printing more money. They think they can fix it by reducing interest rates. Their activities just do not have any impact on this. And they know that. And that's why when you have stock markets near all-time highs, it seems like they're going for it. Speaking of which, no longer loosening. U.S. financial conditions have started to tighten again. That's right, started to tighten. It's worthwhile noting, down in here, they're basically saying we are pretty much back to where we were after the early year correction, and that correction wasn't too bad considering the circumstances. At least not bad enough to flag as a huge risk to financial conditions in the Fed's eyes. Tighter financial conditions are the mechanism that reduces demand and ultimately slows inflation. You see this? If financial conditions don't tighten and inflation remains high in their eyes, the Fed needs to hike more. I hope you realize this. I hope you stayed to this part of the video. We're going on long, but it's so interesting, isn't it? Seeing how the Federal Reserve is reacting to all of this. Behind the curve, consumer prices spiked 8.5% in March, the fastest pace in 40 years. The job market is on fire. And Deutsche Bank is saying that a recession is imminent. Why? Because they are further behind the curve. Inflation is going up. They left interest rates too low for too long. And the result, this higher inflation that will need to be calmed down by much higher interest rates. It's not going to happen overnight, right? History shows that the Fed has never been able to correct even smaller overshoots of inflation and employment without pushing the economy into significant recession. That's the important point. Has there ever been a soft landing? They point to the moment in the 90s and so on. It's a different scenario. Okay, because look at where the employment scenario is today and look at where inflation is today. Both of those need to be factored in. Okay, we got news about what's happening with real estate. I mean, Florida seeming like the least affordable place to live, or the most unaffordable, depending on how you want to look at that. But it's crazy to see how fast things changed, and all of this is really being helped along by these super low interest rates, by these conditions that they never should have been put in place. But here we are. Did you appreciate this video? If so, hit that thumbs up button. Right now it's recording 2 o'clock in the morning here, and working on one business, coming to this business. Hard to keep up, but I'm bringing it to you as best I can. Hope you appreciate that. If you do, all I ask, hit that thumbs up button. I'm starting to do stuff on Twitter, unique stuff on Twitter, stuff that I don't talk about here necessarily. So definitely check me out at The Money GPS. And that's it. I'll see you on the next one. Take care.